we're going to talk a little bit about where to place your stop loss. This chart that we're on here, I have to be a 30-minute alert has gone off, and say we were to take a trade on this particular currency pair, and say we'd gotten in right here on this alert. We're not actually going through to see if this was a good place to get in or not, but if we had, where we would place the stop loss. That's the thing we're looking for. So right down here at this bottom fractal is the ideal place to put the stop loss. So you're putting it out about 37 pips. You hope that that trade would have a potential to do more than 37 pips, and so you want to get to your win-loss ratios as close as you can. But sometimes the stop loss is a little more your expected anticipation of gain, and so you have to determine the strength of the trade to start with as to where you might anticipate putting the stop loss. Some people want to go back to this fractal right here, and that's a personal judgment on that. We're going to scroll through and hit some different currency pairs and where we would want to put our stop loss. Now this particular example here, say we had gotten into a trade right here at this alert signal. Now we know after the fact that did in fact turn out to be a really nice move on this 30-minute chart. But the point is, where would you have set your stop loss had you got into that? Now the place that you should set it is no closer than 1 pip plus a spread above the top of this candle. And in this particular case, that gives us 45 pips, 46 pips away is where you'd be putting your stop loss. So this is the concept as to what you need to do. Let's just look and see if there's some other entry signals that we might have taken. Say you'd taken an order right here on this entry signal right here. Now we're not checking to see if that was a good move or not. Well, we can see that it was, but we don't know what the other indicators said at this point. So the place that you may want to consider, depending on the strength of the move, would be out here about 35-40 pips at the bottom of this closest fractal. It's the strength and momentum is above the zero line, and I'm sure all the other indicators above that would show the same thing. So that's determining the strength of the trade. You don't have to go clear back to here because you've had a lot of support in these. You had support right here with 2 fractals, some more support right here. So the strength of this trade and trend, that's where I would put that stop loss. Let's say that we had gotten in on this alert. Everything looked good, and we got into the trade. Where would you put the stop loss? Would you put it clear back over here? Well, you probably would have been okay. That's 33 pips away. But I would probably have put it here about 27 pips away. This fractal's down far enough that if it passes back below that on its way up, then you know that you should be out of the trade. Let's say you entered this trade right here on this down signal. Now we don't know whether that's a good trade or not. I'm just basically saying, if you had gotten in there, where do you put your stop? I don't think this is a good trade to enter. I would put it right up at this top. This is where the market actually turned. So if you'd entered right in here someplace, you're out about 30-40 pips. Now this is on a 30-minute time frame. The larger the time frame, let's go up to let's say you entered a trade on a 1 hour. Say if you entered a trade on a 1 hour, let's pick another example here. Say you had entered here on this alert going down here, and you see that the 1 hour momentum is down below. So then I would pick that first fractal there, and so about 46 to 50 pip range is what you would be looking there. That's pretty strong, so but move, so you probably wouldn't have to worry too much about that coming and get you, but you do need to always put your stop losses in. Now if you had decided you wanted to take this little retracement trade, yeah, the retracement trade only went 35 pips, but the place you should put your stop is 55 pips. So that's really not a great trade, and you probably wouldn't take that anyway, but that's where you should place your trade. You notice that I'm placing the trade mostly out where the fractals are, and you can choose and make some management decisions. If you're in the trading room, you'll see a lot of times where we place the trades, and there'll be conversation about that. So you'll learn more about where to place stop losses. Most people get taken out of their trades prematurely. They make good entry signals, and they get taken out because they put their stop losses too close, and they get too nervous. If you put your stop loss too close, you're probably going to get taken out more times than you want to be. The one thing that you need to be aware of, if 50-60 pips is too far for you to place a stop loss is 45 pips. If that's too far for you to place your stop loss, I mean, you're worried about losing some money. So if you're placing one lot and you can't justify 45 pips or $45 on one lot trade, then you need to do one of two things. Either don't take the trade or take a smaller lot size. So take a lot size that's maybe half that. So you take a half a lot. Okay, now you're about 22 pips out. Now can you stand $22 loss on that trade if you lose it? If you're still concerned about that, then don't take a half lot trade. Take a 0.25 lot trade. Now you're going to be down about $10, $11. And you say, okay, I can stand a loss of $10, $11 on that trade if it does come back against me. And then that's what you have to do, is take the emotion out of it by not trading too much money, so the money's not a factor anymore. You're trading based on sound principles of where to trade and place your stop losses. A lot of comfort comes in placing your stop loss when you know you've made a good entry. Yes, we had 3 alerts right here, all going up in what we know after the fact is a good trend that's moving up. But as I analyzed these trades, and this is not part of the illustration to show you how to get into these trades, these 2 trades were trades that I wouldn't take. But this one was a trade that I would take. The larger time frames, the day and the 4-hour, by this time had confirmed that the trend was going up. So now that you know you've got larger time frames on your side, and you put your stop here and enter here, you're only out 63 pips on an hour chart. That's not too bad. So there again, if $63 is too much, then cut it in half. If $30 is too much, cut that in half. If $15 is too much, cut that in half. And then if between $5 and $10 is okay with you, take the trade. But you're still trading, but you're taking the emotion out because you're not concerned about losing $5 to $10, but you're concerned about losing $60. In any event, the better the entry, the easier it is to put your stop loss and feel comfortable. So having learned the good entry signals, then it makes it easier to place your stop losses, because this is a protective against some drastic news announcement that might really swing against you, because you've already confirmed that the market's going up on that trade. Now we're on a 15-minute chart. So the smaller the time frame, generally the smaller the stop losses will be, because you're not going to expect as large of a move. And so if you had entered on this alert right here, you're looking 13, 14 pips out is all you're going. So that's not going to bother most people too much if they feel comfortable with that trade. I checked this out. This would be a trade that I would take. But this trade right here, if you were to take it, you're looking out 30, 34 pips on the stop loss here. But I checked, and I wouldn't take this trade. The larger time frames are just showing this is just a little bit of a retracement. So that is the best thing to do, is find out that you have good entry signals, and we go over that in a great deal in the second coaching session. We show you some things that will really make it easy for you to feel comfortable about the trades you take if you follow the rules. And there again, if you don't feel comfortable about losing $35, cut it in half again. And so if you don't mind losing $7, $10, okay, take the trade and see if you can scare out a couple of pips. Yes, if you're trading the really small time frames, you might still be able to take that, but we're using the example of stop losses and keeping your emotions intact by not taking trades that are going to emotionally disturb your finances or your personal emotional or confidence as a trader. If you have any questions about where to place your stop losses, talk to us more in the coaching sessions and in the trading room. We'll probably cover this more in the coaching sessions, but we want you to really grasp the concept of where to put stop losses. Don't set them too close. If you set it to 5 or 10 pips away, yeah, you'll luck out sometimes, but you're going to have it come back and get you other times. So we'll see you in the coaching room or the trading room.